After billions and billions of dollars were liquidated and sold, the market saw a sharp downturn. But what will be the next move by Shiba Inu and the markets? If you have any interest in Shiba Inu in any capacity, or if you possess any SHIB tokens, you really should not miss this video. What is the latest information about Shiba Inu coins, and what effect will it have on their market value? In today's video, I'll be answering these questions and giving you access to all the freshly disclosed price-boosting Shiba Inu facts. I've put a lot of effort into my research for this video, so please make sure to watch all the way through to the end to see all I covered. Furthermore, Sheep News will soon be moved to an alternate channel. Watch the video pinned in the description and subscribe to the channel with notifications enabled in order to see that. However, let's take a look at the chart and see what the Shiba price is doing on April 13th before we get into our topic. The news price of Shiba today is about 2460 units. In the last day, there have been 1.3 billion worth of deals on SHIB, resulting in an 8.4% drop in price. The market valuation of the coin is currently greater than 14.5 billion, putting it in 12th place among all cryptocurrencies in terms of valuation. Please keep in mind that pricing may have changed by the time you watch this video. This is not a guide to investing. Remember to also follow us on Twitter. To enter our forthcoming massive contests where you might win thousands of dollars, simply follow me right now. These awards are something we'll be doing very soon. Let's get started with today's video. Let's first talk about the recent market surge and take a peek at the broader cryptocurrency market. This explains the sharp drop in SHIB, Ethereum, Bitcoin, and the market as a whole. Following a significant correction in the market that saw a decrease of more than 8%, the value of the global cryptocurrency market fell to 2.38 trillion. The market value of cryptocurrencies was lost by about $250 billion as a whole during the most recent sell-off. The price of Bitcoin dropped from $7,978 to $65,254 due to a variety of factors, including options expiration, historical Bitcoin halving trends, macroeconomic worries, and technical chart weakness. Due to Bitcoin's sell-off in the cryptocurrency market, Ethereum's price dropped by 12%. Consequently, all coins experienced a 15%-30% decline. Meme coins are among the most liquidated cryptocurrencies from the previous day. The Bitcoin market saw a sell-off due to options expiry, which was made worse by other factors. Indeed, the signs of weakness in the cryptocurrency market started to appear early this week, even ahead of the US CPI report. The rise in price of Bitcoin to $72,000, as reported by CoinGap, was a range-bound move in response to the increasing number of Bitcoin ETFs and the need for long positions due to the possibility of a Bitcoin halving. Renowned analysts such as Peter Brandt, Benjamin Cowen, and Arthur Hayes all predicted a collapse. There may be a market meltdown if the price of Bitcoin repeats a similar chart pattern seen during previous Bitcoin halving events and the most recent spot Bitcoin ETF listing. Cowen predicted that the price of Bitcoin might drop below $60,000 after the halving. CoinGap also forecast a drop in the price of Bitcoin and Ethereum after options expire. The options expiry at non-UTC signaled the start of the cryptocurrency market sell-off, as the chart above illustrates. The reasons included moderated emotion in the wake of the hotter CPI, a decline in maximum pain points relative to trade prices, and a preponderance of sell transactions in the derivatives market despite low volumes. Significant support levels at 70,468 and 1,200 were breached by the price of Bitcoin, and the sell-off was further prolonged by geopolitical concerns in the Middle East and negative sentiment following the announcement of large bank earnings. JP Morgan Chase's stock fell 6.47% on Friday. The global macroeconomic events resulted in U.S. The yield on the U.S. 10-year Treasury note hit a 6-month high of 4.585% as the dollar index spiked above 106, hitting its highest level since early November. A crypto market crash has been triggered by Bitcoin's price decrease to 1.65, which can be attributed to its inverse link with Treasury and DXY yields. A Shiba Inu is stunned by a 570% increase in inflow when the whales return. The dog-themed cryptocurrency Shiba Inu is responsible for a 570% rise in huge holder inflows, which are connected to the money going into whale addresses. Shiba Inu big holder inflows rose from 408.81 billion SHIB on April 11 to 2.66 trillion SHIB on April 12, per Intotha block data. An important metric that highlights whale activity also exhibits an increase concurrent with the arrival of the large holders. Significant transactions on Shiba Inu moved 8.63 trillion SHIB in the last 24 hours, a 276% rise in transaction volume. This amounted to USD 212.56 million. Volume increases in transactions show that institutional players, also known as whales, are participating actively in the market. There are several reasons why the large holder inflows could have spiked. One possibility is an increase in buying activity from whales or enormous holders who may be buying SHIB tokens on exchanges and putting them in cold storage. Alternatively, as similar inflow spikes usually happen ahead of price bottoms, it's possible that whales are taking advantage of the current market decline to buy SHIB at a discount. This could indicate that they are waiting for a price recovery and are purposefully setting themselves up for future gains. The market is seeing a crypto bloodbath with significant losses everywhere. Therefore, when significant whale measures surge is vital. Sees price drops by 12%. Over the weekend, cryptocurrency prices dropped as risk aversion caused investors to turn from traditional markets to digital assets. An unexpectedly high CPI result, which also sparked concerns that the pace of success in limiting increasing prices may be slowing down, destroyed the Fed's intentions to cut rates this year. The majority of cryptocurrencies, including Bitcoin, are currently selling at a loss as market volatility returns. If you're still watching, we would be very grateful if you could click the like button. It is incredibly helpful in supporting the channel and is totally free. But continue watching to find out about the most recent Shiba Inu updates, as well as the Shiba Inu coin's possible future. A market expert believes there are factors that will push SHIB to 3,100 units despite a recent dip. One of the largest crashes of the year occurred in the cryptocurrency market yesterday, with most coins losing double digits in value in a single day. During this slump, the price of Shiba Inu has dropped significantly, falling 11.6% the day before. Components that could improve Shiba Inus. But according to market watchers, this drop is merely a retest of Shiba Inu's lows, which might lead to a large price increase. In his latest research on trading views, Maximilian revealed that SHIB bulls continue to cling onto their tokens despite the continuous fall. This is a sign that recovery is about to happen. The Crypto Basic emphasized this trend in a previous investigation, pointing out that most Shiba Inu and whale addresses kept their holdings. Based on information from an accompanying chart, Maximilian observed that SHIB had remained steady within a rising channel on the 4-hour chart. Shiva makes a higher noise. The unceasing increase in loudness provides additional evidence in favor of Maximilian's optimism, which demonstrates that consumers are still interested in Shiba Inus. The transaction volume of SHIB has risen significantly during the past day, rising by 164% to a current value of $1.2 billion, or 8.41% of its total market value. Furthermore, Shiba Inu's derivatives volume jumped by an astounding 201% to 3,697 million in just one day, according to CoinGlass data. This increased volume happens despite a 21.79% reduction in open interest to 66 million as traders sell their positions following the market downturn.